Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. What do we got today? Well, I think we can see the what is it? It's a ZB. Okay, that's the bond. I was looking at the bonds this morning, just looking to see what they're up to, because it's obviously an eye on the currencies. You can see here it's when the bond rises in price, interest rates are going down, and vice versa. So this long ride down basically has been interest rates increasing, and we talked about that yesterday. How the difference between like AI versus consciousness, the way the free market told the Federal Reserve, you be wrong because you belong. And when you're long something and it goes down, you're losing. That's right. So that's where we are at today. We're just starting off again as usual, looking at interest rates and the currencies. And let's get the dollar index up on the screen there. I believe it's still sliding down like it did yesterday with no problem, because I can see the euro at the moment as we speak, and the euro is down for the day. They're trading at the 105.31 area. There it is right there. There's the dollar index, and as you saw on the interest rates, the price of the bond was going down, so interest rates were rising, and when interest rates are rising in the States, we find the dollar index gaining in value. You see that? This is definitely higher here than it is right there, that's for sure. So that's what's going on. There's the I guess that could be like the 9-month. That might be a 2-year high at this point. That would be interesting to take a look and see. When's the last time? Let me go over to the dollar index on the other platform. It'll show me at least their futures contracts. So they expire and they change, and they expire and they change. It goes on and on and on. Now, let me just take a look and see. I would say that's got to be something like a 2-year high or 3-year high. Let's see, right there. Activate. Let's see the last time we saw that index up there. Where are we at again? Oh yeah, 108. So we're looking for 108. When's the last time we saw 108 on the dollar index? Well, not in 2004, that's for sure. The high is that. So that's the all-time high. Let's go over back to the platform. And I didn't change it, so you're still seeing the platform. Let's bring it back to the norm there. Let's lower that volume of one of the financial channels. There we are. And then let's put, geez, this is where I missed J4X, and having the J4X was so nice to be able to see that. But they unfortunately can't let people outside, or people in the States to use J4X anymore. All right, so let's go to Yahoo Finance. Grab that. Copy. There. Paste. Okay, so there's the dollar index right there. Let's go take a look at it in 1 year. There you are. You see there that high. Nothing in 1 year back. Let's take a look at 5 years. Okay, so there is 23. So the dollar ran up to 115 back in 22. Okay, so that was that inflation year where I'm going to deviate a little bit on this conversation. Oh, hello, Douglas. Good to see you this morning. Good morning, or good afternoon, or good evening, depending on where you're at. Back in 22, that's probably why Mr. Powell is having such a hard problem getting anybody to really want him to stay. And that is that Mr. Powell, Mrs. Yellen, the Secretary of Treasury, and the President, Mr. Biden, refused to accept the idea that we had inflation. And they kept on calling it transitory, don't worry about it. Well, we're suffering from it still to this day. And you can see here, the dollar took out the 108 at, I guess that was, let's see, Mr. Biden came in here. The dollar came down and then the inflation really started to kick up. There's the end of 21, and the policies started to sink in. We started seeing inflation. You could see it on our webinars. We were saying about it. Hey, inflation's here. Watch out. It's taken off. Now, they had, under Mr. Obama, they changed, when he was president, they changed how they calculated inflation. They removed a lot of things out of it. So when you put those things back in again, it was the worst inflation we'd ever seen, worse than the Jimmy Carter years. But they let's say they massaged Labor Bureau data and changed it. Matter of fact, that's why I used to make the joke when Mr. Trump was president the first time around. There was a good chance that we might actually see the employment data go minus. It's been hanging out in low 3s and 4s under Mr. Trump, and it's hanging out in the high 4s and 5 area under Mr. Biden. But at the same time, the alteration, the way they changed it, if you hire more government workers, it brought down employment in America, which makes no sense to me, because when you're hiring government workers, they're living off of tax dollars, so they've got to take that money from you and me, so it doesn't make any sense. But that's what they did under the Obama years. So our high, or let's put it this way, the low employment that we see today, that's why they've adjusted them down, or I guess you could say they adjusted them up. It's because for the last 9 quarters, we have seen employment go up. I would say employment gains have come from government hirings, and private sector jobs have diminished. In other words, we've been losing private sector jobs. So that means the economy is not really growing, because all they're doing is growing government. Government doesn't make money, it takes money away from the population. And so you can see here, with the launch of inflation, the dollar index got up to the 113-ish area. There, you see it there? That was in 22 at the peak of inflation. And then it's kind of based itself, nowhere near down in here. And that's where we're at the moment. When we look at the dollar index, which now we can go back to there. And there's the dollar index playing around in the 107, 108 area. Let's see, where's it at today? It's trading at 106.40. And it's moving back up again. You can see our algorithm for the last 2 days is in a buy, but our weekly is still in the sell. So that's a good thing. It means for pairs traders, they're seeing a benefit. In other words, it's some of the pairs trades are gaining against the dollar. Now in this case here, you can see it's sold down, went into the weekly sell back in here, and it's been selling down. Not that bad, it's just a little push down, and we're going to see interest rates. When interest rates are dropping, that helps the pairs trades against the dollar, and that's what's going on. And so far, let's see now. Let's just show you the euro. Let's go over to the euro. Right there. And you'll see the same thing I am seeing. Right there. And you can see that's the conversation we had yesterday, which is going to stay on that for a while now, because this is historic at this point. Where the Fed lowers its rates a half up in here, and the free market system says no. So no, it's a stupid idea. Don't do it. You see, this is where they do the quarter point. I think that's where the quarter point was right up in here too. It was the day after the election, and it was making an adjustment for the quarter point, and then the market again turns around and says no, that's a stupid idea. And now we're going to get that next week. The Fed again, the markets are anticipating the next quarter point drop, and we'll see what the markets do to the euro. But more than likely, you can see they've come down from the 112 area down into the 103.5 area. And right now we're trading at 105, basically 105.7 area, 105.07 area, something like that. And we'll see how that is treated. Now, with Mr. Trump being elected, they know now we're going to have good economic policy again. And so you're going to see lower inflation and more jobs and more gains in financially for the population. So but Mr. Biden's out there yesterday talking to the Brookings Institute, where no one's going to ask him a question because they're all on the same side there. Maynard Keyners, they like the idea that government is the mother's tit for us taxpayers. We know that's all wrong. It doesn't work. If it did work, we would see the CCP in China flying, being the lead currency on the planet, instead of their currency or their conversion currency product linked to the dollar. Or we would see CCCP, the old Soviet Union, if it worked, would be in business still. And obviously it is not in business anymore. It's gone. So, we keep on seeing it, and that's probably part of the problem with Europe. They choose to be more socialist / social Marxists or societal Marxists, or they're Marxist in heart and soul, and so that's why nothing's growing in Europe. It has that stagnant characteristic. All right, end of explaining why things are the way they are, and we'll just look at the products. So here it is. There's the euro, and you can see it's pushing down into it. Let me grab one of these reds. Went into a sell yesterday. And you can see the weakness we're seeing today. And next week, we have a big number coming out at the end of this webinar. We have the CPI, Consumer Price Index. It's a big one, big number to pay attention to. I think it's the quarterly one. Is it the quarterly one? It might be the last calculation of the October CPI. They're usually lagging and they're collecting all data and so forth. So that'll be very interesting. We'll keep the webinar going right into the CPI, and we'll have a little comment about that. And so at this point, you can see that it's like a bottom, or they're going nowhere at the moment. It's almost actually it looks like a reverse head and shoulders trying to form shoulder, head, shoulder. That's why they call it the reverse head and shoulder versus the top. And then what you get is it's tried to do it again. It's a second shoulder right there, taking that high out, and now we're down in here again, having the problems. And these lines are the Fibonacci lines. Someone must have asked us about Fibonacci. You can ask us to compare our math with another tool indicator, and a lot of times I just leave it up there just to watch how it works to see if there's any insight to it. In this case here, it's the Fibonacci, which again you can see that our math tells us, it hit here on the Fibonacci line of was it the 100? I guess it is at 112, and we go into a daily sell and we get into a weekly sell. You can see that we put the line in there for that reason, to remind us, and the daily sell here and the weekly sell there. And sure enough, it is, it's ahead of the Fibonacci, because you just don't know. It bounced against it there, it bounced against it there, it keeps on bouncing against it, and then our math jumps out and says sell, 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 and sure enough, it goes down, 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 and that's usually that's why we call our math a consciousness, not a AI. All right, from there we'll go to cable. There is cable. Cable looking kind of firm. It keeps on bouncing back and forth. It's oscillating very closely. You see we got a red dot there, but you can see right here, it's still at 0.00043, now 45. It's just above the zero line, just below it, above it. And if it goes below it, and a red dot, that's the weakness, and it closes there. It's the sell. And same thing here on there's the weekly indicator right here. It's the fast algorithm is moving up, our math, and the slow is still battling, trying to get going. And that's why we always say pay attention to the slow, not the fast. More, don't follow the fast so much. Just use it as a tool when needed. If you have a position, you have gamma or delta or something that needs to be adjusted, then obviously you would use the fast to be able to adjust yourself. But overall, if you're going to be naked, long or short, then the slow is the better way to go, using both the combination of the weekly signal and the daily signal. So in other words, even when it got into, let's steal where's a buy at? We'll find a buy and move that line over. There's a buy. Let's steal that one. So when it goes into a buy right there, and we're in a weekly sell, you just know that it's a dead cat bounce. That's all that is. We know that it's more than likely, because of the weekly sell, it's not really going to survive any real run on the upside. And sure enough, you can see it. Each day it goes up and then fails. Each day it goes up and fails. And it's a little bit higher that day. From this day is a little bit higher, but this day was lower than that. It's telling us. The math is screaming at us. Look at me. Pay attention. That's what it's doing. And you can see here now we're trying to push into the sell by an edge. Now, we've seen some fascinating, I know people get confused or get frustrated or just flat out don't want to believe that politics has an effect on economics. And obviously it does. You can see how we've lived through and endured an enormous burst in inflation and less growth in our economy. And Mr. Biden's obviously trying to tell us it's the opposite, when it's not. We can see it in dollars, in value, in our pocket, so forth and so on. So you have where the politics comes in is that England's talking about having another election after just 3 months of having an election, and obviously the Parliament in France has collapsed, and they're going to have an election, and they're trying to figure out that one. Macron is really a socialist who tries to pretend that he's a centrist, but he's really, all his policies always move towards the left, not the right. Once in a blue moon, you'll see something where it's the right, but overall, it's always more towards the left. And so, we're seeing these in these currencies, but there is no more French franc anymore. It's the euro. And so they're all starting to feel this I guess you could say, frustration with the socialism again. Socialism just doesn't work. If it did, we would have a Soviet Union. We would have a China that, who is starving to be the number one currency in the world, when in fact it doesn't even have anything but a converting factor they call the yuan. So we're constantly we're constantly looking at this over and over and over again, and some people just refuse to believe it because they don't pay attention to numbers. Anyhow, that's cable. We'll see how they play it out. They're supposed to debate the idea of an election. I can't even imagine Labor being willing to surrender. So what will probably happen, just like other times, and that is every time someone, the parliament's full of, I guess, like 700 or 800 people. And some are going to retire, some are going to die, some are going to get ill, and then there's an election, what they call a special election for that one seat. We're probably going to see over and over again, more, if it's not Nigel Farage's party, it will be the Tory party that gains the seat. And so we're probably going to see that going on over and over and over again. So. All right. From there, we go over to the Swiss, which we like to refer to as the inflation fighters. They're staying inside the range that we have looked at. And I know that when I was yesterday poking around trying to find some of the Dukascopy webinars that are recorded and sitting up on the screen there that you can go to the Academy and look at, there was, there's some Dukascopy webinars where they talk about range trading and envelopes and resistance and supports. And that's what we do is we point out those resistance and supports, and there they are there, and the little blue dotted lines here. This stuff right there. And you can see it climbed up into it. The support now was the resistance right there, and you can see how it comes down to it and bangs against it and bangs against it here and bangs against it there, and and it's trapped inside that, which is still not a big number compared to, we saw this currency during the inflation, happening, I guess you could call it, and the Swiss National Bank, the federal, their central bank, jumped out and straightened it out. That's why I called them the inflation fighters. They knocked it down to 101 from 1.01 to now the inflation rate the currency had drifted down to basically 83 and a half. Pretty damn good. I mean, what a drop that is. It's like a 17-18% drop. Everybody, people in Turkey would be begging for something like that. Can you imagine them coming down 18? Let's round it out. Imagine if it came down 20% from 40. That would be, a 20% drop would be 30. That'd be fantastic. They're getting crushed by the inflation. Or was it 32? I guess you could say. And so at this point, it's the Turkish lira is hanging. Is a good example of government that has supported inflation. In other words, it allows inflation to influence everything around it all day long. Whereas the Swiss have done the opposite. They stopped what they were doing, straightened it out, and knocked their inflation rate down with good governance. And so that's what we're expecting from Mr. Trump. We're going to see inflation probably fall almost 50%, which will be an incredible number. It's at 2.6 officially right now with the Labor Statistics Bureau, the BLS, Bureau of Labor Statistics, the BLS, the official government data collector. BLS says it's at 2.6 right now. Some of us who calculate it a little differently say it's more at 4.2 or 4.3. But the official Bureau of Labor Statistics, which companies use and so forth, they're seeing it at 2.6 at the moment. For obviously the Swiss, they've seen a 17-18% drop, and for the Turks, they've seen a 17-18% increase over the same time period. So that's a punishing thing. You go into a store, you're used to buying it for 30 Turkish lira, and now you're paying 36 Turkish lira for it. You imagine before the great experimenter, Mr. Erdogan, former prime minister, now president, when he took over as prime minister, the Turkish lira was trading like 1.5, 1.5, 1.3 to the euro. Now it trades at 36. So obviously that's what you would refer to, what I would refer to, what we all would refer to as hyperinflation. Hyperinflation. All right, from there we'll go to, and I saw, this is, interesting that we are talking inflation again today, maybe just because of the number coming out this morning. Also, Tokyo is seeing an increase in inflation also. They're feeling some real pain in the inflation factor, and you can see their currency has been doing pretty well against the dollar. When it's going down here, that's because it's a dollar-yen chart, means it's gaining against the dollar. And now this bounce here has spotted movement on the upside. You see our math picked it up right here, and here we are there. You can see the weekly is right on the edge. It is flirting today as we speak with the weekly buy right there. Let's just put that in there for a moment. I don't know if it'll last. We've been in a weekly sell for this little ride down, and on a weekly basis and a daily basis. So that was a winner chicken dinner trade. I know that they're having some real problems in Tokyo about the inflation. I would hope that they'll work their way through it, not pull the Aragon, and instead go with the Trump concept of fighting inflation. Less spending by the government. Less printing currency by the government. At the same time, the opposite of Maynard Keynes, more productivity and less taxes, so that the people are not being punished by the inflation. Ta-da! Huzzah! All right, from there we'll go over to the great experiment right there. And there it is. There's the Turkish lira trading at 67, I'm sorry. And it pushed into the sell yesterday, so let's steal one of these. Let's put a sell in there like that. Put a red line in there right there like that. You can see we we haven't seen this long a streak now in 4.5 years, where the back in the days when can you imagine the product was trading 4.5 years ago at the 10 area and 8 area? Now it's trading at 36. What's 4 times 8? 32. Wow. Think about the punishment the Turkish people have taken for their fearless leaders' experimentation of finance. They've seen where they walk into the store and hand them 8 lira and they get a loaf of bread. Now you walk into the store and you've got to give them 36 lira for the same loaf of bread. That's very painful. Truly painful. Ow, it hurt. All right, and then from there we move away from the Great Experiment and we take a look at the South African Rand. And notice I put that line in there saying, look, it's trying to move down. Overall, it's trying to move down. And so when it's moving down, we usually see gold move up, since this is the #1 producer of gold in the world. So let's take a look at gold. That was the dollar index we were staring at. Go Navy. All right, there it is. There it is right there. You can see gold is trying to lift up the last 2 days. And we are today flirting with a weekly buy after being in a sell from the 2750-ish area and here, 2740-ish area, something like that. And now we put the line in at after the fact. And so then you can see here they drifted down into the 2550-ish area, 60 area right there. And now we've started to bounce, and it's went into that sideways action that we see on the the South African Rand. You see how it's hesitated back and forth, and then after that big spike up and it started to move down, we started to see gold try to lift up again, and it has. And it's been sideways just the way the South African Rand is, and now you can see as it's gaining in value, gold, we're seeing the South African Rand dropping. See, it's it had the one drop, and now it's been a little drop here and a little more drop there, and then more little drop here, and it's showing all that weakness. So let's grab this sell right here. So it went into the sell there, and you can see obviously this is lower here than it is there. And remember, traders, markets don't usually move in a straight line. They usually zigzag, like as if they're trying to dodge a bullet. They're trying to score a goal. That's usually the way it works. And so at this point you can see and I can see that gold is rising. And we see silver, same thing. We see the rise in that. And you can see it's flirting with its weekly buy also at the same time. And then we go and look at copper, which is like looking into the soul of China. You see it's doing the same thing, trying to lift. And this is not challenging the weekly. The fast is, but this is not. So more than likely, I saw on the tape last night in the China market. I watched the Asian markets a little bit as they get going, and they were saying that the Communist Party will be getting together to discuss inflation and more stimulus. So that committee is going to be put center stage, I guess you could say, and they're going to start deciding how or why or where or when, what they're going to do. Now, we've only seen them put out 1.4 trillion won. Our estimates here are they need about 27 trillion won to stimulate the economy. Then CCP had a conference, I guess it was about 3 weeks ago, maybe 4 weeks ago. And they laid out another 3-year plan. I was making jokes about 3 and 5 year plans. I think it was a week before that. These communist, these Marxist societies have these command and control system economies. So they try to predict future events, and what to do about them to try to make them more positive so that people don't rebel against it. And so, they did. They came up with another 1.4 trillion. So, but that's over a 3-year period, a 3-year plan about putting out another 1.4 trillion. So that would be 2.8 trillion. Or we round it out to 3 trillion yuan that they're going to invest over the next 3 years on the economy. And obviously, we can see it in the stock market. Let me just put the stock market up on the screen here. Let's take a look at the Shanghai. And not doing anything, since they've announced that, it's not really doing what the first sugar high did. When they pulled, when they said, hey, we're going to, come out and we're going to do a stimulus back in September. And there it is right there. We'll show it to you. It was like zoom. All right. Then this was the second one right there in November, and that didn't go over too big. It didn't do a run from here to there. Instead, it did like a little run from here to there, and sold off again. Then they had another conference. They made an announcement last night, so that means that if anybody's ever been on a committee for government or anything else, they talk 30 days ahead of time what they're planning on doing. And so, somewhere's out there, they decided that since we didn't get much of a reaction to stimulate the economy with another 1.4 trillion over a 3-year period, that maybe we need to actually announce another thing. So they're getting together again, and the committee inside the Chinese Communist Party will decide again what to do next. And they'll probably watch the Shanghai, and see what the reaction is, because they're trying to stimulate the economy. And the Shanghai index is trading in, what was it? Last night, it's up a little bit today. So you can see here it's trading at 3,432, but the all-time high is around 6,600. So it's still 50% off the all-time high, whereas yesterday, the NASDAQ or the QQQ or the Tech 100, whichever you want to call it, that's the index of 100 of the NASDAQ, was at all-time highs yesterday. So, and the Dow Jones Industrial Average might have been yesterday or the day before was trading at all-time highs. And the S&P 500 was doing the same thing. So, here you see the American indices at all-time highs or just underneath them. And you see the Shanghai 50% below, and that yesterday instigate me to basically describe some of the other issues we see on our planet. Deutsche Bank, Citibank, things like that, where they are way underwater, compared to their all-time highs. And matter of fact, I think we did a webinar no more than like 4 or 5 days ago talking about the idea, when you're following the markets, pay attention to where the all-time high is of that particular product or market that you're looking at, because it's always well worth paying attention to, because it gives you a good idea. So in other words, when money managers are out there telling you, you should buy Deutsche Bank or you should buy Citibank in New York, it's like, oh, okay, what's it trading at? Oh, it's trading at $66 right now. It's like, oh, okay, that's pretty cool. But they don't tell you where the all-time high is, which is over $650. So it's like, wait a minute. The all-time high is, 90% away? So why would I be buying that? And it's been that way for, 14 years? And so it's like, it's doubled in the last 14 years. They like to tell you stuff like that. Oh, Citibank has doubled in the last 14 years. And it's like, oh, really? That's pretty cool, Actually, it's 16 years now. And it's like, wow, that's really cool, maybe I should get in there. It's cheap. And when you find out that it's just a piece of junk, and it's being held up by the central bank. Same thing with Deutsche Bank in Germany. The Federal Republic is holding up Deutsche Bank. It's trading at about, I think it's something like 82% off its all-time high. They can't get anybody to buy the thing. They have to slowly let the positions unwind. When they fell into disaster and were taken over by, both of those were classics. The Citibank in New York was taken over by the Federal Reserve, but they still kept some stock out there so that it pretended to be an independent, but the majority of their bonds and so forth are held by the Federal Reserve. So it keeps the thing alive in name only, really. What was I going after there? I had a point of view. Yes. So the stock fell like 97% or something like that, and now has bounced up about 7%, which is pretty cool. It makes sense to me. And what's this? Mark's going to be in Mexico. Okay. Cool. All right. So then what you have is same thing with Deutsche Bank. Oh, I know what I was going to go about. Is that they had positions on that were enormous. They had swaps and pairs trades that Citibank equated to, I think it was something like 66 trillion, not billion, not million, $66 trillion in swaps and positions. I mean, that's enormous. Why they were allowed to pull shenanigans like that when you have options markets makes no sense to me. So they went bankrupt, basically, and were propped up by the Federal Reserve. And then Deutsche Bank was even worse. They had 72 trillion in pairs trades and swaps. And now both of them are down into the low 20s in the trillions. And I guarantee you, the moment those things drop into the billions, they will be married off to something. I don't know who or what or when. I mean, for years they tried to convince Commerzbank of Germany to buy Deutsche Bank. You know, the Federal Republic wanted to get it out of their portfolio. They didn't want to be holding something like that. So they're unwinding these positions naturally, letting them expire. And as they expire, then they go on to the next. And in other words, they're not adding to their positions. They're unwinding these banks until they get to a point where they'll be manageable. They'll be in the billions. And, when they get into the billions, then they can sell these properties off, basically. So, and then, if you own the stock in either one of them, hopefully there'll be a little bit better premium. Will, with Citibank at 66, will somebody buy it at 100? I doubt it. Will they buy it for 66? Of course, because the market shows it. Maybe they'll end up selling it for like $70 or $72. But it'll be the real proof of everything I've been saying now for 15, 16 years. And that is, these things are gone. They're only there in name, and no one wants to own them, really. And so they're just trying to help out the investors who've been in them, who own the bonds. Like there was this one Saudi prince who has a nice hedge fund or, financial market. I forget what his name is now. Nice guy. And he had, at one point he owned like a quarter of Citibank stock. And so, he lost, billions from it. Lost billions. And it's the same thing probably with Deutsche Bank. He probably owned some of that too. And so, what we're doing is we're seeing this unwind. Excuse me, I had to sneeze there. So we're seeing this slow, steady unwind responsibly, hopefully. Let's say that. So, anyhow, that is, what are we looking at there? That's Shanghai. So we'll see with the communists. They made the announcement that they're going to have another committee meeting. And maybe at the same time, inside, the insiders know that nothing is going to be done about it. In other words, will they put up, I say they need 27 trillion won to stimulate the economy. They've put out 1.4 in cash, which equates to about $156 billion. And now they're talking about another $156 billion over 3 years. But they really need to put out a heck of a lot more. They need to put out something on the range of about $5 trillion, not $1 billion. So anyhow, that is the action we're seeing there. And again, we'll be watching to see what the Communist Party committee comes up with on trying to prop up the economy. And that's the inflation gig again. It really is. When you have your currency or your what do you call it? Like a transfer gauge. That's what the yuan is. If they allowed it to float, does it go to 30? Does it do what the old Soviet Union problem? We had 4 ruble to the dollar, and after the Soviet Union collapsed, all of a sudden it became something like 8 rubles to the dollar, and then 13 rubles to the dollar, and I think the quote in there today might be 100 rubles. I saw it as high as 115 a few weeks ago. There's some tough numbers there. That's like watching. That's why we watch the Turkish lira. To see an industrialized nation shoot themselves in the foot over and over again is something to pay attention to. It's interesting to watch, see how they get out of it, see if they can learn a lesson from it, or just show irresponsibility as governors governing a government in an irresponsible way. All right, from there we'll go to, and there's that, and then we go back over to here, and that's copper, and that's why copper is not really trying to get into the weekly buy. It is going through the manifold on the negative side here. That's interesting. You can see the histogram, moving up. This is the standard deviation of our math there. That's what that is. These, what I call nonlinear time manifolds. These things right here. That's what they are. They are standard deviations on our math. Using standard deviations on our math, just like Bollinger does. And I think there's one product we always have. Someone asks us to keep Bollinger Bands up on our math. Let me see if I can find it. Because I always find that interesting. Was it the euro? No, that had a Fibonacci. Was it the Swiss? Yeah, it's the Swiss. And so you can see there's the Bollinger Bands, standard deviation basically. And you can see our time manifold. When we get through right there, notice that the Bollinger Band, bouncing around on the center line, really starts to get traction. Our math kicks out and says, get long or be wrong. And, you've seen where it's done it here a few times. It bounces off of it, bounces off it, bounces off of it. And we're ahead of it. Again, that's how we have a comfort level of saying our math is ahead of the Fibonacci or the Bollinger concept. Ta-da! All right, back to the South African Rand and the metals complex. Right there, and that's copper. Now we'll go to the platinum. Let's see where platinum is. Right there. That's January platinum. You can see it's been in a daily buy for 2 full days. You can see it's green and red 3 days back. Then it jumped into the buy yesterday. We took out the high of yesterday with no problem. Matter of fact, we went after the close of the day before even with that little buy signal. But due to the fact that it's in a weekly sell, we just know the strength is there, but it's not strength we desire to trust more than just in a short-term intraday situation or a one-day situation. Because we know that overall it's still in a weekly sell, and it's telling us that this is just a dead cat bounce. All right. Now from there we'll go over to the energy sector. Let's take a look at crude. We'll start off with Brent to start off with. Let's put Brent up on the screen. All right, there's Brent. See 3 days of strength. You see it's the second day there. Is that a second day? Yeah. Yeah, second day there. And are we seeing the 11th yet? Let's give it a refresh. Yep. Okay, so that's fine. So it's the 11th there, so it's 2 days there. But unfortunately for the ones that want to be long, we're playing with a weekly sell right there. So not really something we want to say, hey, I know cold weather's coming, these materials, oil will be used to heat houses and so forth, and generators will be generating more electricity so that people don't freeze to death and all that other stuff. But overall, it's telling you that the high up in here of 82 back in October may not be revisited again. Especially with Mr. Trump coming into office, and his theme song is "Drill, Baby, Drill." Drill for that oil. From there, we'll go take a look at West Texas Intermediate instead of North Sea. There's West Texas Intermediate. And you can see there, we're getting that same positive action. The strength is trying to kick up. And we're in a weekly sell again. This thing has been vacillating back and forth. Sell, buy, sell, buy, sell. We'll see. You would think that if it doesn't get into a buy next week, this could be the beginning. I see that will put us into just 2 weeks away from January, and then at the same time, Mr. Trump's the Congress changes like on the 3rd, so we're going to see legislation and stuff like that going on like 17, 18 days before Mr. Trump becomes the permanent president of the United States instead of the elect president of the United States. We could just move that over like that. This is our beta. It's a fun thing. We like that. We move the weekly over too, just the same way. Like that. All right. And then from there, we go over to natural gas. Let's see what natural gas is up to today. And then we can go look at let's do the refined product instead of that. We'll take a look at what they make from crude oil. And that is kerosene, diesel, gas oil, all these other things. But here, the HO is heating oil. And that is our kerosene, that is our diesel, that is our diesel, kerosene, and heating oil, the three of them. It's the same product, basically, a little thinner or a little thicker, but overall it's the same product. You can put them in. I know I have a big machine, and I can put diesel in my tractors and so forth, and I can also put kerosene in my tractors, and I can also put heating oil in my tractors. They'll burn any one of those three with no problem. One a little more efficiently than the other, because kerosene basically goes in the jet planes that fly from continent to continent. Diesel goes into the trucks that move services and goods from place to place on the land, and then heating oil heats a furnace that generates heat so that you don't freeze to death. You can see here 3 days in a buy right there. Let's move that over. Matching up with the green there, and up, but not going too far, but moving up. Where's it at today? 220. Okay. Just good. Bought some on Monday, so I'm happy. There is Monday. So from there, actually it was Friday's price I got. I got Friday's price I bought it at, so that's cool. And then you can see here, the weekly is in a weekly sell. But this was for a furnace that I have. I do have a 200, or I guess you call it gallons? What's gallons in metric? Kilos. I have about 75 kilos of oil in a tank for the tractors. But I buy a little refined more for the furnace. So that's where they're going with that. We're seeing some strength. I don't know. We'll see how well that strength holds up. Since we're in weekly sells, I would assume it'll curve again and move down. I mean, today in the United States, where I'm at, temperatures are, last I looked, they were at 17 Celsius or 60 some odd degrees Fahrenheit. So we're not exactly seeing cold weather here. Cool weather. From there, we'll go look at the natural gas. Natural gas is used to heat houses in a lot of places in the world. That's why we pay attention to that. We are the largest producer in the world of natural gas. You see here, it's been in a sell, and it's trying to fight its way up into the buy. Let's just give it a refresh. And then we'll move the daily algorithm over like so, underneath the daily chart. And then we'll move the weekly over also. You can see there it's in a weekly sell. Doesn't look like it's really going to get into the buy at all. Here we are. It's only hump day. It's Wednesday, but it's halfway through the week, and chances are it's not going to change at this point, but we'll see. And at the same time, you can see here it's much lower here than it is from there, where we went into the weekly sell up in here. So it drove itself down. Now it's trying to pop back up, but the warm temperatures will definitely excite people, and that's the way it rolls. All right, now from natural gas, we go to Spain and take a look at an energy company in Spain that gives us a good insight of what Europe is paying. And we saw that yesterday, slammed the stock down. We're looking at the stock of the company because it's really hard to get quotes. Janos was talking about trying to get Dukascopy to open up a contract of that, but it's a tough delivery situation. And you need to hedge it with options and so forth, and a lot of people are not that good at doing that. But let's go over there and see it. It's EN, like in Nancy, Edward Nancy. Let's see, it's up here. That's where it is. It's up in here. There it goes. ENG, like an engine, MC. And there it is right there. And you can see it's dipping down again for like the last couple of days. You can see here, let's give it a refresh. And at the same time, you can see the daily algorithm is pressing down. Right there. Giving you future insight of weakness. You see the weekly has pressed into the sell. It was in a weekly buy for a few weeks for this nice move up. It was interesting. And now it's trying to reaffirm that be careful. Don't get too brave about owning it. Cold weather or not, record cold weather in Europe, we're not. All right, that concludes. We got about 6.5 minutes to the news. What the news is going to be. So let's see. We're going to start getting prepared for that. Now, remember, traders, you could ask in the middle of anything. I have no problem answering questions and stopping what I'm rambling about. I enjoy having discussions, and we just follow the same rhythm constantly so that we can, have something to say in an organized way. So at this point, let's see, gold held a 3-day advance as traders prepared for U.S. inflation data that will help determine whether the Fed Reserve cuts or holds rates next week at the final meeting of the year. Spot bullion traded just below 2,700 an ounce after rising by more than 2% in the prior 3 sessions. Yeah, and we showed you how we were in a daily buy. I'm looking at the news tape now. They're talking about U.S. CPI data due out and in a matter of, 5.5 minutes? Something like that. Month CPI gains, we can expect a 2.7%. Okay, so they're thinking it's going to move up 1/10% because we are officially at the Bureau of Labor Statistics at 2.6 now. CPI, it'll be interesting. Let's see. Oh, China, PBOC, People's Bank of China, which holds large dollar reserves, has a strategic interest in reserves diversification, may even increase gold demand during periods of local currency weakness to boost confidence in their currency, according to an analyst at Goldman Sachs Group. But I don't really see. Gold hit an all-time high of 279. Okay, I don't really see. Their currency is fixed to the dollar, so I'm not sure what they're talking about there. Goldman Sachs loves to talk their book, as we used to say. Oh, here's another interesting thing up on the tape. SpaceX valuation jumps to about $350 billion in insider deal. So SpaceX, its investors have agreed to purchase as much as 1.25 billion of insider shares. Musk rocket satellite maker at about $350 billion, according to internal emails seen by Bloomberg. Per share price of $185 is up. Okay. Let's see, what is really crazy about this is that almost no investor wanted to sell shares even at $350 billion valuation. The company formerly known as SpaceX. So he's got like $500 billion in stock in his pocket. Elon he's a character. A refugee from South Africa, I guess you could say. They're part of the Commonwealth, so they went right to Canada, and then from Canada he went to college in the United States, and then filed for a citizenship, and got it after a while. So he's an American citizen now, and that's why he's very pro free markets, free people, and free speech. Oh, here's one. Brazil's politics. Fiscal plan lacks votes, House Speaker says. How about that? All right, where are we at now time-wise? We have 2.5 minutes to the number. And you know what? Maybe what we'll do is let's see what the intraday stock is doing with the S&P 500. File open. Let's see. We'll put that up on the screen so you can see the stock market do its thing. Also, we will keep the euro up there so we can take a look at the euro too. But now the S&P 500 I think it's down for the day. Yeah, it's down. Dow Jones Industrial Average is down about 7 points. And let's see. We got a few things pushing in opposite directions. With about 2 minutes to go, 1 minute and 30 seconds, we're going to see the CPI, and markets are poised to watch it. Now, here is let's go to a very short term. There it is right there. And there it is there, trading at 653.50 with 1 minute to go. And we'll see how excited they are. Let's see what kind of action they see. It'll be fascinating, because now it's going to come out in a matter of seconds, and you'll see it jump or drop. Be jumping, it be jumping. Watch it jump. All right, with 30 seconds to go, here is the CPI. Oh, there's more story now about Brazil. Lira said that the government still doesn't have enough votes to approve the fiscal plan, but the measures could still go to a vote this week. Okay, well, that's pretty cool. I think they'll float it down, I guess. So here it goes, and 4 seconds, 3 seconds, 2. Oh, look at them take off. So maybe it was, whoa, look at them swing back and forth in an 8-point range in seconds. And there we go. And so the CPI, the actual number is, they must, I guess it came out at 2.6 or 2.7, and, not, must make them feel that they're going to cut interest rates, because that's when the stock market goes up, when they think they're cutting interest rates. $2.7. Okay. So it came out what they were predicting, and because it came out as what they were predicting, the S&P 500 has moved up about 12 points, 12 handles. So U.S. November core CPI is up 0.3%. And so what we're seeing here is consumer price index 0.3. Let's see. Okay, March it was up 0.4%. Okay, so it's up 2.7 as they were expecting. And that alone makes them feel like, okay, Fed can cut the official interest rate. That's what it really is, the official interest rate, not necessarily what the traders will do, but we'll see how they go. Matter of fact, what we can do. Oh, you're not even seeing it. I'm sorry. I didn't even have it on there for you. There it is. So there's where the news came out. Sorry about that. Someone should say, I don't see it, Doc. So you see right there, it jumped up into there. See that? Exactly. And you can see that happened within the first few seconds. And, it's telling us that interest rates are exactly where the inflation would be where they think they should be. Now, what we can do is we can go take a look at the 30-year bond right here and see how they treated that. You can see it's towards its low. So if a bond is going down, interest rates are rising. So they're not exactly too happy. See that? They're not too happy about that. So in other words, when the bond price rises, interest rates are dropping. The bond vigilantes, as the Fed chair likes to call them, have been selling bonds for the last 3 days. They were 3 days ago figured that this was going to play itself out that way. And you see at the moment it's down a little bit, taking, I guess you could say it's at a 4-day low or a 5-day low, I guess you could say. There, a 6-day low would be right here if they took that low out right there. So that's the action we're seeing there, traders. All right, this is Doc from North America. We will catch you all tomorrow, Thursday, same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day. Ta-ta for now.